housing market, where they've come from, where they are, and maybe project where they might be going. Happy to take questions. And I should warn you, however, I've got a lot of good news for people who like bad news. Because the market's not looking anything like as good as it had for the last 2 years. And I'm expecting that most of that has not really got through to most sellers yet. So the biggest challenge you've got is trying to tone down their optimism and get them realistic. Now, some of the information I give you may be very useful there, because look, it's not as good as you think. Just because your neighbour sold for $200,000 doesn't mean you can add 10% and get 3 offers the next day. So this starts off with the market cycle. This is the sort of chart that applies to many markets, but particularly the housing market in Phoenix is very cyclical. We have big ups and big downs. We've just been through one of the biggest booms in 2005, 2006, and then the bust of 2007 and 2008. And that's still very much on people's minds. The point of this chart is that you can feel a lot of emotions when you're going through this. Usually your emotions are a very bad guide to what's really happening. Because you tend to feel most optimistic just about 1 month before the market collapses. And just when you're feeling in despair, that's when you really ought to be snapping up every bit of real estate you can, because it's never going to get cheap. And push it very hard to do that, because your emotions tend to control all of your decisions, not the numbers. I'm here to, I'm a mathematician, so I'm really dedicated to numbers. I'm going to tell you what they show. We actually have a chart that looks remarkably like that when we look at the pricing over the last 14 years. This is taken from sales through onwards, and it's for the whole of Greater Phoenix. And you can see we've had a pretty exciting ride. We started at $99 a square foot 14 years ago. And the very latest number for February is 128. We haven't finished February yet, so that's not necessarily the final number, just as it was yesterday. And in between, we've gone all the way up to 190, peak of the bubble, which was June 2006. It looked at one stage as though we were going straight to zero. And we actually stopped suddenly, peaked up for a little bit, partly because investors started realizing that they could make a lot of money renting out these houses if they could buy them as cheap as they were at that stage. And partly because the government stepped in and started bribing people to buy houses. Bribery often works. When they stopped bribing, we came back down. We had our final bottom at $79 a square foot, which now seems amazingly cheap compared with where we are today. In fact, it is amazingly cheap. If you look at inflation of the same period. Most people who remember 2000, so the market was kind of so-so, it was neither frantic, neither hot nor cold, so it's a decent starting point. So we don't really have bargain pricing anymore, but we're not overpriced. This isn't a bubble, this is a recovery going back to normal. So we had a long period there where people were paying prices which mean they're now underwater, and a long period where people could have bought at bargain. And if we measure off where we are right now, it tells us we've gone up 62% in about 2.5 years, which is incredible. But I have to warn you, that does not mean that your home has gone up 62%. It means the homes that sold are selling for prices that are 62% higher. But the homes that sold in September 2011 are not the same sort of homes that are selling now. In those days, we had a lot of distressed homes taken back by the banks were being sold, and many of those didn't have any kitchen appliances. They had holes punched in the walls, they had pool equipment in the States, and nowadays very few of the homes are selling are distressed. So it's altogether a nicer class of home that we're measuring, and that accounts for some of that 62%. Not all, anyway. I mean, the homes have gone up in value, and that's why the assessor is sending you his latest numbers, which are actually not as far up as you might fear if we were relatively common questions I get is, when are we going to get back to that? And I'm really flattered that people think I would know, but I don't know that. 48% is a very large number, and it could take a very long time. On the other hand, if sentiment and the economy starts taking off, it could take a relatively short time. After all, it's at 62% in just 2 years. However, I do not believe that we're going to continue on that angle for any longer. The point is that if you look at prices, it doesn't really tell you much about where prices are going. It tells you where the market has been, but it's a trailing indicator, it's not a leading indicator. If you want to find out where the market is going, you have to take readings of supply and demand, and that tells you where prices will go in the future. Because prices react to supply and demand. When demand is stronger than supply, then prices move up. When you have the opposite situation, we start to get downward pressure at least. The point is, however, of course, sellers resist that pressure as long as they possibly can. Sellers are not keen to drop prices. They'll do anything else first. They will offer concessions, they will tighten things up, they will make some repairs. They really don't want to drop the price. But as a last resort, if they still haven't sold their home, they will start cutting prices. Now, there's my legal disclaimer. It's not very long. It just means, please don't sue me, because everything I tell you is probably untrue. When you're talking about the future, that's a fact of life. You know, the future always tends to be a bit different than you expected. You found that in your life? Well, the economists are quite used to it because they very rarely get any of their numbers that project out turn out to be true. But mathematicians, we're trained to get the right answers, and I'm very cautious about giving hard numbers that aren't, really close to accuracy. So when we look far out, it's very much guesswork. But you can tell where things are going in the reasonably short term. The way I attempt to do this in the most simplistic way is I have this thing called the Chronicle Market Index. If you've been to my website, the Chronicle Report, you'll have seen this on the front page. And this is a way to try and measure the state of the market expressed as supply versus demand. And this was yesterday. The normal balanced market should come in at 100. So if we're below 100, as we are right now, 85.6, we measured yesterday, that's now in the red zone, which says that it's favourable to buyers. If it's in the green zone, it's favourable to sellers. For a while, we were in that yellow zone, saying it was reasonably balanced, but we've actually, in the last 3 or 4 weeks, dropped into a market that's favourable to buyers. By that, I mean that supply is higher than demand. Now, supply is actually below normal, so a lot of people say, how can that be below normal? But demand is even further below normal. We've really got a subdued market here with low supply and very low demand. And the demand, because it's lower than the supply, means that the overall market is good for buyers. By good for buyers, I mean if they're sitting with a negotiation, they've got more power than the seller, because there are fewer of them than the seller would like. This is the opposite of last year. In fact, we only have to go back 6 months to August, and the number was 151, dramatically in favour of sellers. And it had been quite a bit higher. It was 170 12 months ago. Now, when it's 170, that means every time you stick a listing up, you've probably got, unless it's ridiculously overpriced, 3 or 4 offers within the next 3 days, and your job is not to sell the property, it's to decide which one of the applicants to accept. And you put them to the grinder. But sometimes people had 20 or 30 offers. In fact, there was one case not far from here in Glendale where there were 95 written offers. Obviously, probably 85 of those didn't even get a return phone call. And now the situation is different. Notice in those days, it wasn't the demand was strong. People were talking about high demand, and I was saying, this is great, the demand is not high. It's below average, but it was that the supply was very low. The supply was low because we got used to having lots of bank home loans coming on the market. When they started to dry up, there was no sort of replacement for them. Ordinary homeowners were not listing their homes in great numbers, and they're still not listing homes in great numbers. Supply is not high, but it's the demand that has dropped. If you take a long-term view of this Trump index, it tells you a lot about what's happened to the market. You can see we were actually fairly normal through 2001, 2002, a little bit below normal with the aftermath of 9/11, which tended to disturb the market quite a bit, but nothing like what we've seen since. We went absolutely crazy. We went to basically a drunken party. In those days, just about everybody could get along with virtually no documentation, and you could get on